All right. So we are due for a market update. And since it's July, let's take a look at the June numbers. Just at a glance, real quick. Way up in a number of homes sold, 8% year over year. That's a big number. Still up in inventory, which means just a lot of movement in general. And the sales price is still ticking up, which is the one that every homeowner wants to know. Is my house still going to be worth something? Let's dig into the details. Danny, let's kick us off with the home sold metrics.
Home sold in the month of June was, as you mentioned, up. So we were almost at 2,600 houses that were sold in the month of June. Track that back across to the left side of the chart there, and you can see that's up almost 100. Well, no, we'll call that almost 200 from the same time last year. So that's up 3% month over month, 8% year over year. Pretty good movement. The inventory, almost 4,000 homes on the market, which is a lot. Looking back, we've been tracking this for the last couple of years. 2024, that number of current inventory was just under 2,200. So big change over the last couple of years with more inventory on the market. We know that we've been supply constrained for quite some time now. That's opening up, but it's also, I think, bringing more people in that have been waiting on the sidelines as buyers.
Yeah, and I think that the shock of the interest rate hike, at some point, we're getting used to our new interest rates. We'll cover that later. But the fact that there's more activity all around, both in number of homes sold and in number of homes coming on the market, very encouraging for a balanced market. Now, for current homeowners, the average sales price versus list price is something they're always concerned with. I think that's a very interesting metric as well. Let's run through details here, Danny, but it looks like pretty flat.
Yeah, I mean, you can see the big run up, which is normal, right? We roll this chart out almost a couple of years just so you can see the seasonality of all of it. And if you look back to the same time last year, similar kind of ramp up through, from the winter through the spring into the busiest time of the year for us, which is the summer months. And yeah, June was basically a carbon copy of May from this year. I guess the good news there is, didn't drop. Right. So remain steady, remain strong. And again, if you look back to the same time last year, our average sales price now was 436,000 and change. Last year, that was 425,000. So you're up 3% year over year with that average sale price, even though things were not changed month over month. Still good equity growth for people that are homeowners in the market.
Yeah, that's always good news. It's nice to have the average up for homeowners. Not great news for buyers, but this is something that we've been seeing over the years, and I think we'll continue to see forever. Houses increase in value as time goes on. Next metric is our percentage over and under asking. Quickly, the way we dissect this is it's 5% above or below the asking price of the home, what it actually sold for. And the vast majority, of course, will be within that 5% up or down. But we have some details about how many are going over and a little insight as far as how this works throughout the year.
Yeah, and you can see that there's a little bit of a bubble there in the middle of the chart. Really, that's just a sign that things really kind of slow down over the winter, which again is a thing that we see in some other charts. But this is the time of year where things start to pick up. You start to see fewer things that are going under asking, more things that are going above asking significantly. Still, most things are going within that normal range of plus or minus 5%. You see 73% of things went in that range than this past month. But that 10% that went 5% or more above asking is pretty strong as you look at that green segment over the last 13 months or so. And similarly, the orange down below there, just 18% of things went 5% or more below asking. So again, that's a sign of the level of competition for the available homes on the market. And things look pretty healthy here.
Yeah, nice balanced market. There was a time, once upon a time, let's say 20 years ago, when a house that sold over or under 5% was a dramatic anomaly. So, for example, sold for 525 was asking 500. Back in 2005, that was unheard of, right? This is the new normal. We're finding our median point, our acceptable metrics in the market right now, and we're starting to balance out as well. So let's see how that continues to develop. Right now, days in the market is going down. That's a great sign for sellers. It's a alert for buyers to be aware that we have to be ready to go, all your ducks in a row. But let's get into the details there, Danny.
Yep. So again, this is kind of a low point for us for the year. You look at that medium days on market at just 6 days. That equals where we were a year ago. You also see, as you look back a year ago, things started to rebound from that low. So could very well be that as the year progresses here, that starts to move upward as we start to get out of this busy season of ours. But yeah, good to see us back at that low point. It's a sign again that there's a lot of really good activity in the market. Things are moving. I think again, we know, and we've talked about, you do have to price things for what the market is giving you, right? And that's one of those things that really determines whether you're going to start to see some quick action in that first weekend before you even have the open house, or are you going to be sitting and waiting for offers to come in and potentially lower your price? So it looks like people are generally getting it right, and that's reflected in some quick sales.
Yeah, and as always, the nicer houses go first. Buyers that want to do the work, it's reflected in the value proposition. Lower days on the market for the houses that are more complete. That will always be the case into ad infinitum. So the price reductions have leveled out, which is a good sign for this time of year. I think it's about par for the course for this time of year. We're at the hottest point in the market. Danny, got details on that?
Yeah, I think you're right. This is looks like normal kind of leveling off that happens as things really get hot in the market. And you see we're a touch below where we were last year, 23% versus 24% for 3 months last year. So that's definitely encouraging, but pretty normal, I guess, in terms of the last couple of years. We'd expect that this either remains flat in July or maybe starts to tick upwards as we start to get into the fall.
Yeah. So this is another sign, as all the other ones have been, that seasonality is a big part of the housing market. Just keep that in mind if you're a seller. We're in the busiest season right now. Makes sense because of school. Reflected in all our data, even with the idea that we're balancing the market a little bit. Seasonality is a real and tangible factor and something you need to plan for when you put your house up for sale. So that's the advice I have for sellers. Danny, do you have advice for buyers in this market?
I think it's probably, you can look at some of these charts and maybe be discouraged as a buyer just in terms of, prices being high, those types of things. But one of the most encouraging things, I think, is just that inventory number. You've got more options now. I think you do still have to be prepared when you go in to look at a house. You have to be realistic about whether you're going to be able to come in right at asking or whether you need to make some adjustments in terms of, your overall offer, both price-wise and concessions around, or contingencies really around inspections and those types of things. Work with your realtor. They can talk you through all the finer points of that. But just the idea that there's more houses out there, I think, is a good sign. One of the things that is not on the page here, but should have been, is the interest rates, which are pretty much flat. I mean, we were down 5 bips from the last month. The average 30-year note or 30-year mortgage rate is 6.43%. That's down 24 basis points from last year. Not a huge change, but again, encouraging if you're a buyer. So get out there, be discerning, be ready to jump on something with a competitive offer. And you have more opportunities now than you probably have in the last 12 to 24 months.
That's absolutely right. Market is balancing. So just keep that in mind. Seasonality is always a factor for buyers as well, but the market is balancing. So the fact that we have more inventory should lead to more opportunities for buyers as well. We'll keep tracking it. Danny, thanks as always for always pulling the numbers. We pull our own numbers locally. We don't rely on the board because that's kind of too big of a swath of information, and we'll keep you updated as we go. Looks like the market's balancing, and thanks as always for pulling numbers, Danny.